Hello, good afternoon. It is Thursday, so you know what time it is. Thursdays is time for Money Talks. So, welcome to Money Talks with Mitchell Consulting. I am Lauren King Darden, and I am serving as your host for Money Talks, where we talk all things business finance. So, if you have any questions, burning accounting questions, business questions that you want answered, feel free to DM us directly at Mitchell Consulting, or you can comment below and we will hopefully answer your question live at some point. So, what are we talking about today? All right, this is something I know a lot of us are concerned with. Sometimes it is difficult for us to pay ourselves on a consistent basis as entrepreneurs. A lot of things might get in the way. We may have really high operating costs and it's hard, so we just like reinvest our money to ensure the business keeps going. Sometimes, we just haven't really strategized to spend our money well, and it kind of, we get it and then it's gone, and we're like, where did it go? Where's the money at? And sometimes we need to adjust our pricing. But whatever the reason is, it's still a problem for us because, we got to live, we got to pay these bills. I'm in the DMV area and the mortgage ain't cheap, honey. I'm going to just leave that there. So we need to figure out how to pay ourselves as entrepreneurs. And so we're going to be talking about paying ourselves for the whole month of March. And so today I wanted to talk about a foundational principle that can help you on the right track to being able to pay yourself consistently. I don't mean like here and there every once in a while. Consistency, okay? Consistently. And so this is a concept that may not be new for many of you. It may be introduced to some others of you, but we're talking about profit first today. Another word for that would be small plate accounting, okay? So the principles of profit first are really simple. It's like every time you get paid, you take that money and you split it into different accounts so that that money is there, right? It's almost like personal savings, sort of. You get paid, you put your money in the mortgage account, you put your money in your savings account, you put it to your 401k. That's kind of like what you might do if you're a W-2 employee. But for your business, you can do the same thing. Every time you get some revenue in, you want to save some for tax, you want to put some in your owner's compensation or your payroll account, you want to put some in your expense account, and you can create as many accounts as you need, but we recommend having a revenue account, an expense account, like operating expenses. You want to have a payroll or owner's compensation account, and you definitely want to have a tax account. And last but not least, you want to have your profit account. That's your play money. So you want to have a profit account. So how do you split this up? It's kind of based on how much you're making. So, depending on how much your company makes, your percentages might look different. But I think in the book Profit First, and when we think of small plate accounting, they have like a base of what they would recommend for small businesses, larger businesses. So I would definitely recommend you getting that book to see what works for your specific revenue level. But I'm just going to talk about what I have done for my business and how that's helped me. So I like to get paid. And sometimes when you have a service-based business, you can keep your expenses lower. So for me, I like to keep my operating account at 30%. So every time I get revenue in, 30% of that is going to go to my operating expense account for all, like just to take care of everything that I need to keep my business going, whether it's subscriptions to software, whether it is paying for office furniture or whatever you need to operate your business, that 30% should cover it. So when I say I put 30% there, that also lets me know that I need to keep my expenses under 30% of my revenue. You see where this is going? So if I have a target for any part of my small plate accounting, it helps me not only to make sure the money is there, but it helps me to analyze my spending to ensure that I can reach that goal. If at some point I see that the 30% I'm putting in my operating expenses is not enough to cover what I'm spending, then I may need to take a look at what I'm spending. I may need to take a look at, oh, does this system and this system do the same thing? And can I operate efficiently? Can I combine them? Can I find a new system that has both things? Can I automate something? So thinking about your accounting in that way, or just your money management in that way, can help you to make better choices with how you're spending. So you can get rid of some leaks that are in your business. You can run a little bit more efficiently, right? So that's for expenses. Then for owner's comp, I like to put 50% in there because I want to be able to pay myself and take care of my family in the way that I need to. And so 50% goes into owner compensation. Now, you don't have to exhaust that account. It could just be there. If you like to take X amount and you want to keep some of it in your owner's compensation, and you don't want to exhaust the account, that's completely up to you. But if you put 50% there, it's there. Don't touch it, right? I also put 15% toward tax. Now, we done talked about taxes a couple times, and I know it may not be everyone's favorite topic, but having money put away to pay for your taxes ahead of time, it is a piece that surpasses all understanding, okay? Because when you get the tax bill because you've made money, you have it there to just pay it off and get rid of it and take care of it, right? So you want to put away for taxes. Then you have 5% going to my profit account. So my profit account really is rainy day savings for the business, because we know that those days happen, those things happen, crazy stuff happens. I'm gonna say happen again, but crazy things happen and you have to be able to take care of it. You know, you may have brought on a new person and they're hourly and maybe they spent more time on something than you expected them to, and you still have to pay that person. You do. You can't not pay them. So, you might have to dip into your profit account. And it's really for a rainy day, so wouldn't make a habit of it, but it is good to have that money there in case something happens unexpectedly. And you got to take care of it because you want your business to keep running. Okay? So, again, just to recap, a great way to start on the path to being able to pay yourself more consistently is small plate accounting, or we call it profit first. And having these buckets designated for specific things, keeping them below the targeted percentage of your revenue, can allow you to create the pattern of having money there to pay yourself. Okay? So I hope that is very helpful. I hope that you've gotten something from our talk today. If you have any questions, feel free to ask them in the comments or DM us directly. We can't wait to talk to you again. So I'm going to sign off for today. Y'all have a good weekend.